Hi traders, welcome to my Forex trading video tutorial. Okay, in this tutorial today, I shall be going through this Forex divergence strategy. Okay, basically this is a very reliable strategy that I like to use, and therefore I decided to record this video to share with you guys more about this strategy and show you some trading examples from a live chart to see how this thing works. Okay, so let's go through what exactly is this divergence strategy. Okay, basically it makes use of two indicators. It is actually making use of the MACD divergence as well as the stochastic divergence. Both of them are separate strategies, so let me go through one by one. Okay, so first of all, let me go through this MACD divergence strategy. Okay, before actually I can proceed with this strategy, you need to know exactly what is a MACD divergence. Okay, so all you have to do is just plot a MACD indicators, a default MACD indicators on any one of time frame that you liked, or any currency pair that you've liked. Basically, this method works on all currency pairs as well as all time frame. Okay, so let me show you exactly how this thing works. Okay, so let's see, you see here, this is a positive divergence. Okay, this is an example of positive divergence. Actually, I actually take this picture from a US dollar, a Swiss franc on a 4-hourly chart, on a 4-hour chart. Okay, so what happened here is what is exactly a positive divergence? Okay, when you see, can you see that when the price make a lower low, you can see the price actually move here, move up, and move down. You can see this low is actually lower than this low. Okay, this is what we call lower low. But the MACD indicator, can you see this is the MACD line, but it make a higher low. Can you see this low is in fact higher than this low here. Okay, so this is what we call a divergence. Because theoretically, most of the time you see that when this price make a lower low, the MACD also create a lower low as well. Okay, like this case, you can see it's actually a higher high. You can see higher high all the way, but MACD is also creating a higher high here. You can see this high is higher than here. This is a normal MACD patterns that we see. However, this pattern here is what we call a divergence. So whenever we see this positive divergence, it is a sign that the price is going to move down. Okay, it's going to reverse from down to up. So, but this picture here exactly show you what happened after that. You'll see that the price actually moved up 296 pips. Okay, let's say that you're not able to take all this trade, this 296 pip. Just take a portion of it. It's a very good profit. Let's say, for example, you exit at 100 pips, 150 pips, which is a major resistance level. This is a very good profit by itself. Okay, so let me talk about more about this later on. Okay, in the trading example, but let me show you what exactly is the negative divergence. Now that I understand what is positive divergence. Okay, this is a negative divergence. Okay, so a negative divergence is formed when the price make a higher high. You can see that the price move up, down, it move up again. This high is higher than the previous high. Okay, but the MACD is creating a lower high. You can see this high here versus this high here. The new high is lower than the old high. Okay, this is what we call the negative MACD divergence. And whenever you see this, it's actually telling you that price is going to reverse from up to down. And sure enough, can you see what happened here? The price moved down by 115 pips. Okay, which is a very big collapse. Okay, and this is actually taken from the pound dollar on the hourly chart. Okay, this is just to show you that it works on all time frame, it works on all currency pair. So don't worry about the time frame or currency pair because it works on all of them. Okay, so now that we have this two, now that I understand this positive and negative divergence, so let me show you an example. Okay, in the chart. Okay, so this is I open this pound dollar hourly chart. Okay, on this is around August 2013. Okay, so what happened here is that the price, can see here, make a higher high. Okay, create a higher high here. Okay, and what we do is that what I usually do in my trade, I'll just draw the line. Okay, tell me this higher high, and take a look at my MACD indicators, the default MACD. So you can see this high here is lower than this high. So for me, I'll again draw a line. And from here it tells me that what I'm seeing is a negative divergence. So what I'm going to do is I'm going to enter a short trade. But how do I enter it? This is very important. That's why I'm going to show you this video here. Okay, I'll enter this trade right when this histogram flips from up to down, because negative divergence is telling me to go short. So therefore I must make sure that this histogram flip from up to down, and once the down bar has been formed, okay, and has been completed, I'll enter my trade. So you can see this thing flipped from up to down. Upon the completion of this, the next candle, I will enter a trade here. This is exactly where I'll enter a trade, a short trade. At this point, I'll enter a short trade. So let me indicate this trade that I enter using a bold black line. Okay, and where should I place my stop loss is the question you guys will be asking. Okay, I'll place my stop loss at the most recent swing high, which is here. You can see that. Okay, this is actually, I'll show you by red color line. Okay, so this is my stop loss, which is from here to here. It will be about 35 pips to 36 pips. Okay, 35 to 36 pips. So where am I going to take the profit? Okay, with this strategy, I always take 1:2. So if here is 36 pip, my profit will be at 72 pip. I'll set a target profit at 72 pip here. Okay, 1.54650. Indicated by this blue color line. Alright, as you can see, what happens is that the price actually moved down, moved up again, and moved down, moved up, and eventually hit my target profit here. Okay, and this is where I make my 72 pips using this strategy. Okay, so I hope that you guys understand how I actually take this trade. Okay, so if you see a positive divergence, that means the price is going to move up. So what you will do is to wait for the candle, the histogram, to flip from down to up before you enter the trade. Okay, for this example, because I'm going for negative divergence, which is going down, once this histogram flip from up to down, upon the formation of the next one, I will enter a trade immediately. Okay, so this is how I use the deep divergence strategy to trade. Okay, so let's go back to the slide. Okay, so besides the MACD indicators, I also make use of the stochastic indicators to trade this stochastic divergence strategy. Okay, so how does the stochastic divergence strategy works? So first of all, similar as there is MACD indicators, you need to know the positive divergence and negative divergence of this stochastic indicators. Okay, so what you're seeing here on this picture is the pound US dollar hourly chart. Okay, so can you see that price make a lower low? Okay, but the stochastic make a higher low. You can see this low is higher than here. This is what we call positive divergence. So the positive divergence is telling us that price is going to move up, and sure enough, you can see the price moved up by 275 pips. Okay, after the formation of this positive divergence. Okay, so what about negative divergence? So a negative divergence, right, you can see the price make a higher high, while the stochastic make a lower high. Okay, and this is what we call a negative divergence. That means the price is going to move down. Okay, you can see this is on the pound yen 15-minute chart, and the price actually moved down 74 pips after the formation of this negative divergence. And that's how amazing this divergence strategy works. Okay, so let me show you an example of this stochastic divergence strategy. So what you're seeing here is actually the pound Swiss franc hourly chart. Okay, so what we have here is this pattern. You can see this is a low point, this is another low point. So let me connect them together. Okay, so this is a lower low. Okay, this is a lower low, while this point here you can see is a low point, but this is a higher low. So let me connect them, and here what we have is actually the positive stochastic divergence. Okay, this is a sign the price is going to move up later on. So what happened is that when this blue line cross above, this is where I will enter a trade. Okay, at this point here, and where I place my stop loss will be at the most recent swing low indicated by this red color line. Okay, so how wide is this thing? Okay, it's about 32 pips. So my target profit will be double of this, which is 64 pips. So I set it somewhere here. Okay, as you can see here, right, what happens is that, okay, let's see if we enter this trade, what happened? You see the price actually moved up immediately. You see that? Oh, you can see the number is changing here. On the side here is actually the 64 pips here. Okay, at this point here, 64 pips. At this point here, actually I take a profit of 64 pips, which is actually a 1:2 risk-reward ratio for this strategy. Okay, that's how amazing this strategy is. You see, it can go even further. Okay, for those of you with higher risk appetite, you can set 1:3, 1:4 risk-reward ratio, which is a very powerful strategy that I would recommend everyone of you give it a try. Okay, so basically this marks the end of this video tutorial, and I hope that you guys actually enjoy this video tutorial, and I'll try to prepare more videos for you. So for those of you who are interested to find out more trading strategies and tips, you can visit my Forex blog at forexstrategytraining.com. okay, and this is actually my trading blog. Okay, and here actually I share with you other strategies, more strategies, okay, besides this divergence strategy. Okay, how to trade with moving average indicators. You will learn what makes a profitable Forex strategies, as well as useful trend and pattern scanning software that I used. So basically all this thing here are written by me, and I hope that you guys can just come here and take a look and learn more things from this Forex blog. Okay, at the same time, you can just join my Forex trader newsletter. Okay, and you get to download a copy of my book. This book took me 3 months to write, and basically it's a very useful book that can actually improve your trading skills. Just sign up for the newsletter here, which is free, and you actually get to download this book. Okay, for the time being, this is all I have for you. So I'll talk to you in my next video.